Let's get into it. The complete home buying process. So we have the beginning stages, the middle stages, and the end stages for you tonight. No matter where you are, we have the next stage for you. Well, let's get into it, okay? So the complete home buying process. The what's a mortgage version, the min-win version, all right? So the first step in buying a home, and some of you guys already passed this stage, is finding the right lender. It's important that you find the right lender. When you're looking for a lender, you want someone to be transparent with their license. It's crazy. I still see people out there giving loans out without licenses, using other people's license. So you want to make sure, right? If you're looking on their email signature, you're looking on their business card, do they have an NMLS number, right? Do they have a license number? Also, look up their license number on the MLS, right? Go MLS search, make sure their license is active. Why is that? What happens when the deal goes sideways and there's no one to call, no one to report to? So make sure that loan officer is licensed. If their license is not transparent, there's got to be a reason why they're not putting it on their business card and they're not putting it on their signature of their email, okay? Right? We're not here with no Gmail's accounts anymore. This is 2020, right? When you're looking for a loan officer, make sure their email is legitimate. It's not some Gmail like so-and-so loan officer at gmail.com. Guys, make sure it's from a company. Something goes sideways, you want to be able to find that company, right? Also, make sure they're transparent with interest rates and fees. I'm telling you right now, even though lenders don't control title, escrow, miscellaneous, and impounds, which we talked about in our Ultimate Mortgage Guide, but they control the lender fees. Unless you want a specific rate, buying down a certain rate, to a certain rate, they know their lender fees off the top of their head. Because every time they give a loan, no matter if you are getting FHA, conventional, no matter if you're Asian, white, black, or Mexican, the lender fees should be the same. So no matter what, they should know the lender fees. Right? Second thing you want to look for, you want to make sure that lender gives you options. Right? It all depending on your goals. You should know options. If they don't give you options, you make them an option. And number three, especially it's a seller's market right now. You want to be dealing with the lender that's issuing underwritten approvals and not pre-approvals, right? Because when you write your offer, you might not be able to overbid, but you can tell the seller, hey, I only need a 21-day escrow. Hey, I have no loan contingency. That will strengthen your offer to get your offer accepted in the seller's market, right? A finance offer will be more than a cash offer, but people take cash offers because they don't have contingencies. But if you have a loan contingency, if you have a loan, you're getting your house with a loan, but you have no loan contingency, guess what? You will move up the ranks to get your offer accepted. So once you pick a lender, next step, find a realtor. This is what you want to look for in a realtor. You want to work with someone that knows how to negotiate. Just watch the way they talk to you. If you say something and they always agree, guess what? They're not a good lender. Good realtors know how to stand their ground, right? When you're looking at houses and they're giving you too many options and you get very indecisive and they're letting you roll with that, that's not a good realtor. A good realtor closes you on a property because you're buying a home. You don't know what you're doing. Right? And you're all over the place. And those are realtors. A lot of times people don't get their offer accepted. I've seen one realtor show houses a week or two, they're in escrow. I've seen some realtors, right? They'll show houses forever because they let their buyers be all over the place. Right? Make sure they know how to negotiate and they can tell you straight up, this is yes or no. This is going to go down or not go down. Second, you want someone that knows home improvement. Right now, unless you are buying a new build, even if you are, you want someone who can look at the house or understand the property and find out, hey, this will probably have to get fixed. This will have to get fixed. I see so often people go into escrow, right? And the seller, the buyer's agent doesn't know things that are wrong with the house. And then they buy a house and the buyer's stuck fixing all these things in the house. Or there's something wrong, but they don't know how to negotiate the purchase price down because they don't understand home improvement. Guys, there's not that many homes on the market. You cannot use a Johnny come lately. That means someone who's late to the ballgame. Not to anyone against the name Johnny, right? You don't want anyone who doesn't know how to negotiate, doesn't know home improvement, because right now they will gobble you up and spit you out. So no family, no relatives unless they are real full-time real estate agents, all right? So that's how you find a realtor. That's how you find a lender. That's how you find a realtor. Next one, okay? The next step. Finding the house. Step 3, you find the house, right? You find the house, you write offers, right? Step 3 is where you determine the purchase price. You negotiate the contingent close of escrow date, the contingency dates, right? There's typically 3 contingency. There is a home inspection contingency, which is 17 days, right? You have 17 days, right, when you write up the purchase contract to see what's going on. But people can negotiate that. You want your full 17 days, okay? And then you have your loan contingency, right, which is 21 days. And then you have an appraisal contingency, which is 21, 24 days as well, right? This is where you negotiate. In step 3, this is where you fill in all that paperwork. Last but not least, you cut that EMD check, the earnest money deposit check, and it clears. And that opens escrow. So step 1, find a lender. Step 2, find a realtor. Step 3, which a lot of you guys are at when you guys are calling me right now, right? You found a home. You've already negotiated the purchase contract. You negotiated the close of escrow date. You negotiate all your contingency dates. And you cut your EMD check. Step 4, initiating approval, okay? So once you go into step 4, right, you can lock your loan, okay? This is where the lender sends you the loan estimate. After they have identified the property, it means you have a physical address and the EMD check clears, right? They have 3 business days, counting Saturday, to send you the loan estimate, to give you maybe a day or 2 to shop the loan, right? You'll sign your initial disclosures, right? You sign your intent to proceed. Without the intent to proceed being signed, nothing can move forward, okay? So, also, right, the buyer sends in updated conditions. If you got pre-approved 2 or 3 weeks ago, maybe a month or 2 months ago, you're going to need to send in updated pay stubs, updated bank statement, updated assets, right? Whatever you sent in was outdated, you need updated information, right? And also here, at the initial approval, you order the appraisal, the home inspection, termite. Everything is ordered in step 4 at the initial approval, right? You want to get all these things in. The success of closing on time is in step 4. This is where you want everything done up front because you want your approval to be accurate. There's something called a skinny approval. A skinny approval means you'll get approval like that, but it's not the real deal, right? You might get approved, but there's tons of conditions. It might be that one whammer condition that like wham, that kills your deal, right? So you want to make sure, right, you have all that information shoved in step 4 so you can get to step 5. The conditional approval, right? Step 5 is the conditional approval. In step 5, right, that's where if there was any title issues, any escrow issues, any appraisal issues, right, this is where you need it cleared. On the conditional approval, you don't want it to be that skinny approval. You want to be the complete approval, right? But this step 5 is where loans die or make it buy, right? Write that one down. Loans die or make it buy, right? This is step 5 is when you go in and you clear title. If there's any liens, any judgments, this is where you get those things removed, right? Either the seller pays or you negotiate, you pay. Typically the seller will pay, right? To clear title. You clear escrow conditions, right? How do you plan on holding vesting, right? Stuff like that. Appraisal. If the value comes in short, step 5 is where you're going to be stuck at. You can't clear step 5 unless you clear that appraisal, right? If you didn't waive termite, this is where they want the termite to be completed, right? If you have any discrepancies on credit, you need to pay down debt, you need proof to freeze a HELOC or something. You clear credit conditions, you clear income conditions, any assets. If there's a big deposit you didn't source in step 4, that's why I'm telling you, step 4 is when you want to send everything so they can clear step 5 smoother. You want step 5 to be small, not large. You want easy conditions. But if step 4 was done right, when you initiate that approval, step 5 is going to be a breeze. But if you don't, this is where that title can drag on, right? Especially if you're buying a short sale. Oh, it'll take forever, right? Probate sales. If there's liens on it by the seller, if there's liens on it by the seller and they're clearing title, I would for sure tell my buyer's agent, who is the strong negotiator you were supposed to hire, to buy you time. Sometimes when that buyer agent is a strong, even though the seller hasn't cleared title, they're not giving you days, right? Because they're saying, no, it doesn't matter, right? That's why you need a strong buyer's agent to make sure to buy you time if title can't clear, to buy you time if appraisal doesn't appraise, to drop the purchase price, have the seller cover. Hey, this thing's broken, but I know no matter what escrow you're going to get into, every buyer lender is going to require this to get fixed. So drop the price or fix it. So step 4 and step 5 is very crucial. Step 4 and step 5 is where you want to decide if you're going to lock or not lock to. Okay? So it's really important. 4 and 5, I say, is where most loans either die or get by. And this is where you guys now be proactive. Get everything up front. Don't make it a struggle for your lender to get your conditions. Another thing, don't send in your conditions upside down. Don't piecemeal. Do everything at one time. Label your conditions if you have to. Print it out, label it, scan it, send it back to your lender. Make it easy for your lender to fund your loan. Don't just sit there. You have to close on time, but you're not doing anything about it, right? Don't be a couch potato. Get it, all right? Step 6. Step 4, initial approval. Step 5, conditional approval is done. You got to lock your loan. And guess what? The closing disclosure goes out. If you see the closing disclosure, you're so close. You can see the finish line, okay? Make sure this closing disclosure and the loan estimate are very similar, right? Typically, the lender fee should stay the same unless you are buying down the rate last minute or you're taking a higher rate to cover closing costs. There's a 3-day cooling period. If you make too many changes from the loan estimate to the closing disclosure, there's a 3-day cooling period, okay? Then, once that's done, step 6 is you get the CD and all that, then docs go out, right? Docs go to escrow, and make sure at step 6, if your loan ain't locked, it ain't docking out. So step 6, it gotta lock. If it can't lock, it can't dock. If it can't lock, the loan estimate has to go out, and then you can dock it, okay? So once that happens, step 7, you sign loan docs, right? You're going to either sign loan docs at escrow, wherever your escrow is, or you can sign at home. They can send a mobile notary, right? So step 7 is where carpal tunnel is going to kick in. You're going to have to sign docs. You can sign online now. You can sign in person. You can sign, but certain things you have to sign still by hand, right? The notary has to be approved by title. So your cousin Nancy, or I'm not saying your cousin Nancy or your Uncle Ted cannot be your notary unless they were approved by the title company. But I would not recommend you use a family member because they probably don't like that, right? No bank probably would want anything like that. But typically notary will be picked by title, by escrow, but has to be approved by title. Okay? After you sign loan docs, it goes back. Step 8, you bring in the money. Bring in the money, right? When you're bringing in money, be careful of wire fraud. Right? When the notary comes with the loan docs, there will be a sheet of paper that will tell you where to wire the money. If you get an email to wire it somewhere, I would definitely call the escrow company and validate that wire. I've seen so many people, especially recently, have wire fraud where they change the email. It looks almost identical to the escrow company. Instead of a .com, it's a .corn, where it looks like an M, right? So be very, very careful of wire fraud, guys. I'm begging you. You do not want your dreams going down the drain and you wire your money somewhere else, right? Also, guys, only use money or assets from an account that's been verified. If you had a random bank statement somewhere that has extra money because your account was short because you used the money for something, you're going to be in deep trouble. Step 8 is crucial to protect you from wire fraud, but also protect you from closing on time instead of going back into underwriting because and this happens so often, guys, so often, right? Because the lender right? Gave you some boo, your lender gave you some boo-boo that wasn't transparent with the fees, gave you some boo-boo fees, and you thought you need X amount, and you didn't pay attention, and now you're short to close, right? You do not want to be short to close at this end and get some account that you can't validate or verify. Now you're starting the process all over again. You sign loan docs, you're like, oh, my CD, but everything. But you sent the money from the wrong account, and that happens so often. Do not do that, all right? So, go back. So after you do that, you wire the money, you do your final walkthrough, and then step 9, your loan funds. Whoosh, the money sent out, right? The money sent out, you're breathing. Oh my gosh, right? Step 10, it needs to record. If it doesn't record, there's no llave, right? I think there's no keys, right? There are no keys unless it records. So when you fund on Friday, be careful. If it doesn't record Friday, you don't get your keys Saturday and Sunday. You got your moving truck and everyone, all your family out there to help you move, but there's no keys unless it wires. If you're going to fund on Friday, make sure you set up special wiring so that they wire the money and that they can, right, escrow receives the funds so you can get your keys, all right? So make sure record happens. I see people so close to the finish line, still end up closing, but so often they miss the weekend. And the weekends when they had all their family to come together to help them move, and then, hey, right? You want your family there. You want everybody there on the weekend to help you move, right? So make sure if you fund on Friday, that it records on Friday, so you get your keys Friday night, so you can move it over the weekend, right? Thursday, typically it'll record Friday. Wednesday, for sure, record Friday, right? Tuesday, for sure, and then you can move on the weekend. But that Friday, be very, very careful, guys. So now we know these are the 10 steps to the complete home buying process. What's a mortgage style, right? Hopefully you got that. All right, guys, I'm not done yet. Now that we know the home buying process, right? What are the 7 things to avoid if you want to close on time? Check it out. 7 things to avoid. Cutting the EMD check late. Oh my gosh, I see this happen all the time. When you sign the purchase contract, the timer starts. Your timer starts. But if you don't cut that EMD check, escrow doesn't open. The lender can't send out the loan estimate. They can't send you the intent to proceed, right? Make sure you cut that EMD check. A lot of times you sign the purchase contract, you're excited, and then all of a sudden, you want to bring your whole family to see the house again. Are you kidding me? You're kidding me? The seller's like, are you kidding me? Right? If you sign the purchase contract, cut the EMD check. I've seen people hold on to EMD checks for 3-4 days. What happens? You don't cut the check and it's Friday. You just lost Saturday and you lost Sunday. Come on. Cut the EMD check. You're not going to lose your deposit unless you release contingency. So cut the check. Avoid cutting it late. Update your conditions. Oh my gosh, when I was a loan officer, when I was a loan officer manager, I hated when a loan officer would be scared to ask their borrower for updated pay stubs and bank statements, and you submit your condition and you get that skinny approval. But then when you finally submit the updated bank statement, you didn't source the income, you submitted updated paycheck stubs, and you don't have bonus, you don't have overtime, but they used bonus and they used overtime to qualify you. Now you got to wait for another paycheck. Now you got to source those assets, and it's prolonging your real approval. So avoid outdated conditions. Updated conditions only, right? Remember step 4. You want step 4 to be smooth like butter. Okay? Third thing to avoid. Sign and send your disclosures ASAP. One person talked so much crap on me in one of my ads when I explained the 7 things to avoid. You're crazy to sign something and send it in right away. That would be nutty, right? I'm telling you guys, nothing's a guarantee unless you wire in your money. I've seen these people, they get their disclosures, they bring it to their lawyer, or their cousin Jimmy's a lawyer, and they take a week to sign your disclosures. Your loan cannot move. Your loan can't do anything unless you sign your intent to proceed. They can't order an appraisal. If you're going FHA, they can't order the FHA case number. If you're going VA, they can't even go through the VA portal. So you sit there, you take your sweet time to read everything, you look up every word you don't understand, and guess what? You're the one who's closing late. So just sign and send your disclosures in and then read it. It sounds crazy, but nothing can happen if you don't wire in the rest of your money as long as you don't release contingencies, okay? So 13 to avoid is signing and sending in your disclosures in late. Avoid that. Send it in ASAP. Fourth thing to avoid, large deposits. I see people, they already been validated their account, but they went out, oh, I'm short some money here, let me use it out of my account. Don't worry, I'll just replace it with this other money. They wire in a large deposit. They can't source it because someone repaid them back some money, some cash. They can't source it. You're just prolonging your escrow, right? Now you have to use assets from another account, or you have to back that amount. You might not be sure. Now you got to get a gift from a family member. You're just dragging on the process. So avoid large deposits. Another thing, avoid new inquiries. Guys, I know you want to get that washer and dryer. I know you want to go out and finance that Peloton. Wait till you close escrow. Don't start financing something, especially your credit report is close to 90 days or over 90 days old, and they have to do a refresh. They start seeing all these inquiries. You haven't bought the product yet, but the bank knows you're about to buy a bunch of things. It can affect your debt to income ratio. So pause on that refrigerator, pause on that washer and dryer, pause on that Peloton, pause on cash advances, which I see a lot of people do, so they can pay a construction worker to work on a house they don't own yet. So pause on that. Don't go out and get more trade lines. Wait till you close escrow. Take it in. And this sounds crazy, guys, but so many people do the things I'm telling you, right? It's crazy. I'm telling you. I'm like, it blows my mind what crazy things people do. Number 6, avoid taking time off. I see a lot of people do it. They're in escrow. They're taking time off to look at furniture that they're not supposed to buy. They go out to make deposits they're not supposed to make, right? They're doing things they're not supposed to do. They're taking time off to do it. If you are a 40-hour employee worker and they're asking for an updated pay stub and your income is declining, now you got to explain that to people. You're taking time off to go to the doctor. People are going to the doctors, right? Even during COVID, and they're shopping for a home. You're going to go get COVID from the hospital and bring it back to the house you're about to own too, by the way, right? Avoid taking time off. Wait till you close escrow. Don't run errands getting the conditions for your lender while you're at work. Do it during lunchtime, right? Or do it on the weekends. Do not do it during work time and lose hours, especially if you use overtime or bonus and all of a sudden you don't have overtime or bonus because you took some time off. Avoid that. And last but not least, avoid using unverified accounts. Like I said, use the account to wire in the funds that's been validated by the lender, right? By the mortgage company. Do not all of a sudden have this brain fart and go out there and use another account, which happens all the time. If you're a lender, you're watching me, you're probably laughing right now. You work for escrow, you are laughing your butt off right now. But you're a consumer like, that's crazy, right? But it happens all the time. All right, guys, so those are 7 things you got to avoid. If you avoid these 7 things, your loan will go like butter, baby. Like butter, baby. All right, guys, so that is the complete home buying process. What's a mortgage style? And that's the 7 things to avoid to close on time. Guys, hopefully you enjoyed my version of the home buying process. Hopefully you got the 7 things to avoid. And there's 7 common things that happen every day in the loan buying process. Talk to your lender, talk to your realtor. Are you looking for more answers or do you have more questions? If you do, call me 714-410-5556.